this, and 3, 2, 1. One of these days we'll get our own theme music.
That would be good.
But right now, we're going to keep using this one.
Plagiarize this one.
Yeah. Well, it's not plagiarizing. It came with the equipment.
That is true. We paid for it. It ain't plagiarizing.
We paid for it. All right, folks. Welcome to the Weekly Update Show. We are live here in our studio recording for you. Weekly Update Show. This will come out on a Sunday. But hope your week has gone well. And Jerry's got some good info for us this week.
Yes, this was a big week for the stock market, as we know. The S&P hit a new all-time high, both daily and weekly. So on Tuesday, we had a daily closing high, and by Friday, we also had another high. So we had a weekly high, and we're gonna get to that in a second. But first thing is we're getting off of Oprah. I think we did Oprah, the same quote for the last 2 weeks.
No more Oprah?
No more Oprah this week. But we are going back to a familiar one, Warren Buffett. Risk comes from not knowing what you're doing. Sounds pretty straightforward.
Yeah.
Pretty broad, but actually my takeaway from that basically is know your game. So Warren Buffett has a specific game that he plays, right? He famously sat out the tech rally in 99, 2000. He didn't participate in it. And people thought he was nuts, but it wasn't his game.
He's not nuts.
He's not. He also didn't take the huge decline from 2000 to 2003. But he knows his game, and he only plays his game. So, risk comes from not knowing what you're doing. The first thing is knowing your game, getting really good at your game, and sticking with the game that you know you're good at.
Yeah. And I would say not to, flatter you because you don't take flattery well, but I would say that's pretty much what you've done, right? Ever since I've known you anyway, you've been really consistent about sticking with your game, right? So this is what you do. People come and ask us all the time about other ways. Yep. And like those ways don't necessarily, they might work. They do work. Some of them do.
Every way works until it doesn't. To include this way,
right?
Honestly.
But I think consistency is key, much like everything else in life, and it's about knowing your lane, your game, and playing it, right? And not getting tricked into thinking, well, what if I did this? What if I did a little different, And you may have done that maybe 20 years ago, right? Until you got confident in you knew you were a government employee. Right. You knew you needed to maximize your TSP over, the length of your employment or whatever. Right. And you also knew that you had this knowledge, right? And so you took those two together and said, hey, okay, this is how I'm going to approach this, right? Minimal risk, but get the gains when I can, and keep it really simple. Yeah,
that's one of the best parts and worst parts of the TSP. I mean, having only 3 stock funds, 1 bond fund, and a savings account, basically the G fund, makes it very simple. Yeah. Right? It also limits your upside.
Right. It could be very frustrating at times.
Yeah. Oh, yeah.
Like we don't have more options, but then if we had more options, it would be very difficult to be focused. That's why, again, so here I am in retirement, and I go to Fidelity and I open up an IRA and I roll over my money, and I'm like, oh, I've got millions of options. I can do all these things. Right. And then what you end up doing is either becoming overwhelmed, or not focused enough to play your game. Right. And not going with what you know, right? Yeah. And so,
absolutely.
The quote's a really good one for this week.
Yeah. Okay.
I will add, hold on because I was thinking about this when I saw the quote. Right. Is the risk comes from not knowing what you're doing. And I think that's what we're really, really trying to do here. And I hope everybody is getting that, is that we're trying to find ways to educate you guys. Right? Outside of being a member of the site, and there's more value in being a member than not being a member. Right. However, we keep all of this information out and open so that we can educate as many people as we can, because we think and we know that there's so many people out there in the government and in the military that are not getting this information. Yeah. They're just not getting it, right? I mean, nobody sits you down and says how important this is, except like maybe when you first come in.
Yeah, no, it would be probably the most important class you take, or class or hour-long chunk they give you when you first in process.
But you don't know it.
But no, they don't give it to you, and you don't know it. Yeah. You don't know to ask for it. So it's funny. Like last week, I was saying we dropped my daughter off at Penn State for Navy ROTC, and so we spent last week filling out a whole bunch of forms. and there was SGLI forms, and like all these different forms. There were no TSP forms.
That's crazy.
And so I don't know if you have to look. I don't know if you get it as a student in NROTC or whatever. I'm not sure, but
I bet you'll know.
I'm going to find out.
Yeah.
Yeah.
So but isn't that amazing? I mean, I guess everybody doesn't go into the military thinking they're going to retire from it.
Right.
And I think maybe more so in the federal government, we think that this is going to be our career and whatnot.
Yeah.
When you go in the military, you don't know if that's going to be your career.
Right.
You think it might, right? But it's a little bit, at least when I went in, it was a different approach. You weren't necessarily a 20-year person just because you went in. Right. And, but even if you spent that 4 years, putting money in a TSP, you can roll that over into an IRA or a 401k.
Right. Right. So now it's different than when we were in, right?
Yeah, we didn't have that.
Right. Yeah. We didn't have it. So now you can spend however much time, and it's the blended retirement option. So
which is more like the federal.
It's much closer. Yeah. Which is great because you can do your 5 years or 10 years or whatever, something short of 20, and you don't get the defined benefit, the pension piece, but you get you get to roll over your TSP piece into an IRA when you move on to your next job, or roll it into the 401k on the next job you get, or something like that.
Now we just need to get the millions of people that are in the TSP to lobby Congress to let us get the closing price at the closing of the day.
Oh my God, yeah.
Instead of noon.
Actually, somebody messaged me about that.
I bet.
Yeah.
Yeah. I noticed that when we brought it up, we've had a few people say something about it, and I'm like, you know what? If there's anything we can advocate for, right? This is apolitical, or non-political, whatever the right term is. No, there's nothing to do with that. It has to do with that is just one of the dumbest rules. And I'm sure it's administrative in nature, meaning when they first started this, technology wasn't prepared as much as it is now. You can't tell me you couldn't wait till 3 o'clock to make, or 3:30, or closer to the end of the day, the market day, to make that decision. Not freaking noon.
I don't remember. I don't know if you remember. Do you remember when? I think it was 2004, maybe. It was the Bush administration. It was when TSP went from being like an allotment type of format to a net asset value. So it was a huge deal, and it enabled us to trade every day.
Right.
And that lasted for about 2 years, and then they changed the rules to only let you trade twice a month. But for in that 2-year period, I don't remember if you still had to get your trade in by noon to get that day's closing price.
Yeah, I wasn't even focused on that sort of stuff back then, right?
Yeah.
Should have been, but I wasn't. But yeah, it's the good thing about that is we know that it's changeable, right?
Oh yeah,
it's definitely changeable, and it's about pressure on elected officials to say, hey, this is important to us. And I know that most people that have been in the government long over in the military long enough to know that we have a good voice. We have a big voice.
Yeah. Oh, yeah.
And so once you realize how important this TSP is for all of us for retirement, then it's like, okay, well, if we change just a couple things, right? Give us 3 moves a month and let us make it by 3:30 p.m.
I mean, that's what I was saying. Like if you had either pay a fee each time you want to do more than 2 moves a month, that's one option, right? Or if it's 2 moves a month, that's 24 moves in a year. I can do 24 moves a year. It's just that I can't necessarily only do 2 a month.
Within the calendar month.
Right.
Yeah, that constraint is what kills us.
Yes.
It's not the total per year.
Right.
It's total in the month.
Right.
Yeah, and I know all of this is about, keeping the fees as low as they can.
Definitely. Yep.
But I also know that technology has gotten a lot better, and they can do this a lot cheaper than they used to. So they're slicing it as thin as they can anyway.
Yeah.
So
it'd be really cool to when we start getting people on the show, getting somebody from TSP on here to talk through the basics of how.
I think if anybody was willing, they're going to be scared. They were like, these guys are going to rip me apart.
Yeah. That would be really cool. All right,
let's get into this.
Yeah, let's get going. All right, so okay. So like we said, big week. Bear market is officially over. Okay, so what exactly is a bear market? Definition of a bear market is a 20% loss in one of the major U.S. indexes, right? So usually the S&P 500, which is the C fund. So in this bear market in 2020, it lasted 33 days. From 19 February to 23 March, it was the shortest bear market in history, and it was also the fastest recovery in history. We're going to take a look at that on the next chart, which is going to lay out basically what a normal bear market and recovery looks like compared to what the one that we just did in 2020 looks like. after that, well, then we're gonna go through. If you looked at last week's weekly update, it was focused on Elliott wave counts, and we're going to look at two of the charts from last week that talk about what are the likely possibilities going forward. Now that we've hit a new high on the C fund, is it smooth sailing and it just keeps going higher, or what's probably coming around the corner?
And I will add that we told folks last week that we were going to try to do a separate show on the candlesticks, the things that you use on the charts, and we're going to do that completely separate so that we don't have to kind of take over a weekly update. Yeah. And so not this week, but we'll get to it soon, and we'll have a separate kind of like show for that.
Yeah. Yep. Okay, and then at the end we're going to go through the three daily charts just to kind of wrap it up. Okay. So this is a long-term chart, right? 1996 to present, and you can see my theory of the Elliott wave count right now is that I'm not showing it on this chart, but if you could go back to the bottom of the Great Depression in 1933 or 35, wherever the bottom was, that would be the beginning of this new long-term rally. And at some point there was a 1, a 2, and the top of the 3. Let me see this. The top of the 3. I'm having such a hard time with this.
Yeah, your pen is not.
It's not working.
Not helping you.
Okay. That 3 right there represents the top of the 3 leg from all the way back to the bottom in 1933 or 35, whatever the bottom was. Mm-hmm. So we had a 1, 2, 3. So the 3 ended in 2000, right? So that's like a 70-year run up to that point for the 3. The 4 leg off of that took us to 2009. All right, so that's like a 10-year sideways, sideways consolidation 4 leg, and so the 5 leg from that, if the 4 is 10 years long, the 5 leg could be 25 years long.
Yeah,
I mean it could be really, really long. So
it is right now, right? I mean,
well, we're like from 2009 to 2020, so we're 10 years into it now. So it's possible that the 10 years that we just did is the 5, and we're at the end. And if you Google Elliott wave theory and all that, anybody who's bearish on this whole thing thinks that we are at the all-time mega top, and when we start rolling over, it's going to be the end of the world as we know it, kind of thing. And it could be. That's one of the possibilities. I just don't think so. I think this bear market that we did, this crash that we just did, took us down low enough to correct enough of the move from 2009 to the top in February 2020. I think it corrected enough of that. So if that's the case, then we're at a 1, at that 1 right there. So that means that 1 is 9+ years long, right? And so the 2 was only 33 days long, which is really goofy, right? Or ordinarily.
That's historic, right?
Yeah, it's the shortest one in history, the shortest bear market in history. So you got this spike down and the spike back up. But the important thing is how much it corrected, because a lot of money was lost. 34%. It fell 34% from the high in February. So, and it got below. So the 2 right here, if it is that, it got below that low. Because what we had here is 1, 2, 3. This was the 4, and 5, which makes this a 1. And so that 2, this 2 here, because it's lower than the 4 here, means that it corrected enough. So we could be on another, in the big scheme of things, we could be going much higher from here. It was one possibility. And so to get there, though, we've already come, I think it's 54% from the low down here on March 23rd up to here where we are right now. It's like a 54% gain we've made. It's huge. I mean, people have made a ton of money from March 23rd to now, a ton. It went straight up. It has to correct. So just because it corrects doesn't mean it's going to crash and keep going and keep crashing, but it needs to correct or consolidate. So that's kind of what this 2 here leg is going to be eventually when we get it. So whether it comes, in the very near future or in the relatively near future, the next 6 months or so,
right,
that's what the next 2 charts are going to look like. We're going to look at. Okay, so the bullish scenario going forward, say for the next 6 months or so, is if this is the Elliott wave count for, from the March low. So if this is correct, 1, 2, 3, 4, 5, and we're at this one right here, and then the ABC was the June July correction. That's a 2. Then the 3 will keep on going, and then we'll have a 4 and a 5. It'll do something like that. That obviously takes us way above the prior high, right? So this is where we are right here, 3, 4, 5. Then we'll get something like this, right? But we don't have to worry about that right now. So that's the bullish, meaning in the relatively near term, we would expect the market to go relatively significantly higher, maybe another 10 or 15%, 20% higher from here before it does a major rollover. The bearish scenario would be the count is 1, 2, this is the 3, 4, and 5 is already done. So if this 5 is done, then we get an ABC correction, which is great because this is still 1, right? 1, 2, 3, 4, 5 gives us a 1. We got ABC, which gives us a 2. And then from here, we're going up. So it's possible that in the relatively short term, we get a pretty good correction.
Yeah,
right?
and what we don't know right now, obviously, is just how long that could take, right? Like you said, it could be within the next 6 months. It could be in the next 2 months. It could be the next year.
Right. Well, we're going to stay with the trend until it changes, right? So if right now we're riding that 10-day moving average, right? If this is the correct Elliott wave count, and we're at this 2 right here, it could ride that 10-day moving average up to 3. And we'll just watch it. We'll just watch it. It'll just keep going because we're in the stock funds. We'll just watch it keep going up. At some point, it'll do some kind of correction. Who knows exactly what it'll look like, but that'll be the 4. And then we'll get a 5. And then we'll be talking about a pretty significant rollover. But that's the bullish scenario. If we can get through and honestly, I don't know how we do it, but if we get through the election and the run up to the election and the election and the coronavirus and all the rest of it, if we had a vaccine that looked like it was really, really promising, something that could push us up to that 3 and 4 and 5, then we could see that. Maybe we get that through the election into January and then it rolls over. I mean, who knows?
Yeah.
The media will certainly tell us why all these things happen.
Right. They get the benefit of hindsight.
Yeah, wouldn't it be good? If not, we've hit this double top, and we get some kind of correction. But then, even then, if this is the 2 here, we're set up really, really well for whenever we bottom out here at the 2 to move higher. There are other possibilities, but that's definitely enough for now. I just want to go back. I want to go back and look at one thing real quick because I forgot to talk about this. It's a really big deal that we're at the prior all-time high, right? But if you look at the last time we had this, in 2000, we hit a high here. And then in 2007, we had a double top, and it closed. It's kind of a little bit hard to see here. Let me see if I can zoom in. Okay. You can see where the high was in 2000, right? And you can see where the high was in 2000, at the end of 2007. It was just a little bit above the prior high, right? Barely. That's basically where we are right now.
Mm-hmm.
Now, I'm not saying it's going to roll over again like it did here.
Yeah.
I'm just saying just because we've broached the prior high doesn't mean it's smooth sailing going forward necessarily.
Yeah, we just have to keep our eyes on it.
That's all. That's playing the game that we know how to play. That's all it is. All right. Sorry about that.
Jiggled the zoom.
Okay.
I'm just happy we finally found a way for you to draw on the screen.
I don't know how it happened, honestly. I was playing with these stupid things, and now I'm good. All right. So that is the bullish and bearish scenario. One of the two will play out in some form or another over the next 6 months. So we're going to wrap it up here with just the daily, what we put out on the weekly update on the post. You get the C fund, again, closing at an all-time high. It's basically riding that 10-day moving average. The interesting thing is the RSI indicators are not really overbought right now, right? And the MACD is flat. So if the MACD was really high or really low, then you can expect the market to go in the opposite direction. But right now, it just doesn't get the feel that we're really overbought that much. So it sort of supports the idea that prices can go higher from here. They could roll over too, but it wouldn't surprise me at all for prices to go higher from here. The S fund almost looks like the exact same chart, except I drew that the 5-month trend line because it's a little bit smoother than the C fund trend line would be. But we're holding pretty steady right here above that 10-day moving average, and we're holding above that 5-month trend line. So if and when, because it certainly is a when, the S fund, in this case, drops below its 10-day moving average and drops below that 5-month trend line. So say we get a closing price down here somewhere. It doesn't mean it's the end of the world, but you really got to start paying attention to what's going on, because if we got, say it dropped down to 1,500, came back up to 1,550, and then rolled over, that's a change in the trend. All right, that's what a change in that's as early as you can get in, because then it's much more likely to do like that. So that's what we're looking for. And that's why I keep harping on the 10-day moving average line, because obviously every time it dips below the 10-day doesn't mean that the market's rolling over, but every time the market rolls over, it starts with a dip below the 10-day moving average line by definition, right? Okay. Last chart. Last week we talked about the two alerts, and I'm a little bit more positioned in the I fund than the other two stock funds because of the breakout which happened on that day right there. It broke up through resistance at 64. So what happens frequently after a breakout is the market will roll over, test that floor, which it used to be a ceiling, and now it should be a floor, and it should go higher. Right? So it came over, tested, and it should go higher from there. If it doesn't go higher, any significant close below 64, and I'd be out. I won't say I definitely would be, but I would be very suspect of staying in the I fund if that 64 level of support didn't hold. So we will definitely be watching that closely. The 64 level is really important. And let's see if I can do this. That trend line. So I might give it the 64 and let it come down to that trend line. If it goes below that, I might get out. We'll see. We'll talk about it when it comes. But we are right on support right now. So that's the week.
No question slide?
No. I can see it, but you couldn't see it.
Yeah.
No, you could see it, and I could see it.
Now they can see it.
And we can't, unfortunately, do questions. However,
we can. We just have to do them kind of virtually,
yeah.
Right? So, or not virtually, but because again, this comes out as a premiere on Facebook, the Facebook page, and so that comes out like it's a live recording, yep. Right? And then we post it in the group. Yep. And now what you guys will see is we've had a lot of requests to have a YouTube channel, so we finally got that set up. So when it posts in the group, it will also post to the YouTube channel.
Nice.
And the good thing about the YouTube channel, we'd always planned to do it, is that you can go to one place instead of on Facebook where it's hard to. We don't really manage how all the videos are done, right, or how they're kept. But now on the YouTube channel, you do. So you can go back, and when we mention, hey, episode 3 weeks ago, you go back and look, and you can, fast forward and, all those good things. So now the YouTube channel is going to be really handy for kind of referencing other things.
Yeah, perfect.
And we can put links in the videos, which we can't do on Facebook. So that means if we say something, that we can actually put a link back to an earlier broadcast or a blog post. So we're going to get way more creative with the YouTube channel. It's going to take a little time because, it's just two of us.
Yep.
And it's not our day job yet.
Yeah, we're getting there.
Yeah, we're getting there. So, all right, guys. Well, we appreciate you tuning in this week, and we will do our best to keep progressing with this. But please give us, comments. They're always great. We love the positive comments. But if you have something, a little critique or something you think we could do better on the show, feel free to send it an email.
Send it an email. Yeah.
Info at growmythriftsavingsplan.com. We both get that email box, and so we look forward to next week. We hope you guys have a great week. Anything to roll out for us, Jerry?
No, let's do the extra.
The extra. I'm calling it the outro.
Outro. Exit. Outro.
Is it too early for a beer?
It's 5 o'clock somewhere.
That's why I love you, Jerry.
I need some Jimmy Buffett quotes is what I need. We're going to get off of Warren Buffett and get on to Jimmy Buffett.
I'm all for it. All right, guys. Have a great week.